So now let's look at the example that we had there with the $23,000 barter deal, or that was on the table, or $23,000 total expense with $10,000 in barter, and how we can look at allocating that $10,000 barter. So basically we're going to look just at the $10,000 component and not everything else. You can look at the other invoicing and things and obviously follow that through into the departmental side as well. But we're just going to focus strictly on that $10,000 that was coming through on barter. And so as we kind of acknowledged in the previous video, that if you were to put that $10,000 expense entirely against the purchasing department or the building, in this case, I believe I have a department called the building, let me just find it here so I'm utilizing the right terms of the matching terms. So I have one here called building and property management. So Marshall Bob's Saloon, the building and property management department are the ones making the bathroom decision. They're the ones whose budget is impacted by that expenditure. And so when they're looking at the $10,000, there's kind of two different ways, there's many different ways of splitting it, but two kind of main ways that I see as ways to split it and manage your departments in a way with barter that is can make their budgets make sense. One is to allocate a portion of the barter revenue to the department that is making use of barter in sort of an inter-department allocation. The other option is to actually set up another department that's just the trade dollar or BarterPay clearing department. And so I'm just going to set that up. We won't use it in the one example, and we will use it in the other. And so we'll just save that. And we're going to say that we're expensing the bathroom maintenance, renovation, or whatever. I realize that in some cases, or in potentially all cases, you might be capitalizing that, but still you'd have a capital budget that you'd be tied to. And so whether you're talking about the capital budget or the expense budget, it doesn't really matter. And so we'll just say it's an expense for this example. And so let's say you're going in here doing a vendor bill. If you've been kind of watching some of my other videos with respect to accounting, we've got Steve's Contracting as our contractor that we're working with. And so we'll say for Steve here, and we're going to use he's given us a trade invoice and also a cash invoice. In this case, we're dealing with the trade invoice. Anytime I say cash, I simply mean Canadian dollars. Obviously, if you're a big corporation, you're likely cutting a check, not handing Steve cash, and that's obviously fine. In fact, I personally prefer not dealing in physical cash, but because there's terrible tracking. So when I say cash, I do mean Canadian dollars, whether it's check, credit card, cash, or otherwise. And you likely have a purchase order. So let's say that's your purchase order, and you have your bathroom reno. And we're just going to throw it, like I say, throw it through an expense line, general expenses. We said it was going to be $10,000. And we're going to assign it to a department. So in this case, in the case where we are saying, hey, you know what, it's all going against that department, you could have a senior management person saying to the building and property maintenance department, saying, too bad, so sad, that's the way it is, work with it, it's better for the business overall. But then it gets forgotten, right? So it's part of the overall budget. Now they're chasing to try and save, because they were about $3,000 difference, they're chasing to try and save $7,000 somewhere else. And so we're just going to save that so that we have that invoice. So that invoice right now has been totally allocated towards the building department. And so from here, if that's what you've done, you could allocate part of the sales. So you could say, okay, well now BarterPay is going to send sales against that. And so we're going to do it you could do it as a journal entry, and you could say that you're going to allocate some of the sales, so future sales. Now they realize we're doing with, so let's say they're doing a big catering job for somebody as a result on barter, and they're going to allocate that from the sales department, a portion of it. So let's say that 50% of all sales that are done on barter get allocated away from the sales department. So $5,000 gets allocated away from the sales department, and it gets reallocated to the building and property maintenance department. Sorry, oh, we need to give it a reference number. Journal entry 001, sure. So let's call this 4001. Because for the purposes of sales tax and income tax and those things, and your financial statements, the barter sales should be properly allocated as sales and shouldn't be offset against expenses. They are sales and the expenses are expenses. And so that's why in this case we were allocating it so that the building and maintenance department actually has sales as part of it. So now if we were to look at the profit and loss for the building department, which this is the only thing it has in it right now. So we're going to do by department, and we're only going to look at the building and property management department. So normally the building and property management department doesn't have sales, but in this case, now that we're talking about barter, now it has this $5,000 sale, and then it also has this $10,000 expense, meaning that instead of the $10,000 expense counting against them in full for barter, it's actually only counting against them for $5,000. So now it's, when you take the total expense, which is the 13,000 Canadian dollar invoice, which we could just run through to make it easier to see, but the $13,000 Canadian invoice, and now this $5,000 net cash expense from trade, now they're being properly charged at the $18,000 in terms of their budget, and so now they're making the proper or correct decision in terms of which contractor to pick on that job. So that's one way of managing the allocation between departments, is to basically say, okay, well then we will do an inter-department allocation based on whomever is utilizing the trade, that whether it's half of what they use. Every business might be different, will be different based on their cost of goods sold, and so you may even want to, for whatever reason, discourage barter things, or want a bigger spread on the barter and say, hey, you know what, only 25% of whatever you spend in barter will be inter-department allocated from the sales department on the sales that they're getting credit for as a result of barter transactions. And so you can do it that way. I know that for some people that gets a little confusing, or a little bit, it doesn't feel quite right, because you're not used to a particular department having sales be part of their department. And so the other way to do it is to have the barter department take some of the expense. So we're going to go to our journal here, and we're just going to remove that journal entry. I think I can do that. Yes, I can. Delete that journal entry. So that's gone. And now we're going to look back at that vendor bill again that we've already input, which is right here. And we're going to edit it. There we go. Okay. So instead of saying the whole bathroom reno cost on the trade side, so it's going to go towards the building department. So basically right here we have that this is going to the building department. We're actually going to break the invoice down and say, okay, 5,000 of it is, once again, I'm assuming a 50% allocation of the expense is going to the particular department that's incurring the expense, and 50% is going to the trade dollar clearing department. And so we're recording that and saying, okay, well, that's how we're going to manage the trade dollar allocation. And so now I'm going to post that side of it, and then we'll talk about the sales side right after, because obviously whatever you do on the expense side, you have to mirror or match on the sales side. So now when you look at the profit and loss for that department, so now we're looking at that building and property maintenance department again, and you can see now we've removed that sales adjustment and we've adjusted the general expenses so that it only reflects the $5,000 that is the quote-unquote cost of the trade dollars that are being flowed through, and so the net, including the $13,000 that was going to be in Canadian dollars, the net cost is $18,000, which once again is cheaper than the $20,000 that they otherwise would have spent. And so instead of being negative 20 in terms of the loss, because it's being a cost department, would only be negative 18,000 once that cash portion was put through. But that doesn't answer the question about the sales department. So on the sales side, when looking at the trade dollar sales, you'll likely want to break out and more, like I say, more advanced softwares, or even more advanced versions of the Sage software could handle this, but is basically having customers that are specifically trade customers, or being able to allocate certain revenue streams as being kind of the trade revenue streams, or if you just have bigger trade transactions that are isolated, then that's could be easier too. So let's say that we arranged a big catering job for them, and it's going to be with one of the charities that Barter Pay It Forward supports, and so they negotiate and they find that it's going to be conveniently enough, it's going to be $10,000 in barter as well, plus the tax. So when they're issuing that invoice, and I suggest splitting the Canadian dollar and the trade dollar portion of the invoice makes it sometimes easier to keep track of, and so let's say that we get them, the United Way gets added, and we'll say they're in Ontario, and we'll just call it sales products. Save. So now we do the same thing, but in kind of the reverse side. So basically we're doing a catering gig, and there's catering, and we got sales products is fine. And then we're saying $5,000 is being done for the department, and $5,000 is being done to the clearing. And so there's clearing, and there is the sales and marketing department. Now, obviously there's going to be costs associated with that. So for the sales and marketing department to do a additional job like that, let's do a vendor bill here, and obviously this is being made very simplistic, but let's say that we have a food and beverage vendor who takes care of all of it. Sorry, let's add that, and he also has to have a province. Now, unfortunately, he doesn't actually take trade, so this is basically food and beverage for that one catering job, which is going to be $37.05 is what we kind of put out there, and that's going to be allocated towards the sales and marketing department. Save. And so now when you look at the sales and marketing department, you can see, calculate, they've been given credit for $5,000 of the $10,000 in sales, of which they have a cost of $37.05, meaning that their net profit is $12.95 on that transaction. And then the trade dollar clearing department ends up netting out to zero. Obviously, if there's a time where you've done more sales and you haven't spent it yet, then for a period of time, the trade dollar department will appear to have a profit. In times where you are now the next period, you have spent more than you have earned in trade, then in that time frame, the trade dollar clearing department will appear to have a loss. But really, it's a clearing department. The overall trend, when it's all said and done, should be that this department should be zero. The key is that whatever the ratio is that you're allowing the purchasing department to make their decisions based upon, the sales department has to be utilizing the same ratio. A individual owner who is managing a business or has appointed a manager who manages all parts of a business and is basically making the decisions unilaterally and not necessarily looking at budgets and comparisons and being evaluated just on purchasing or just on sales, will look at this way all at once and be able to see the benefit, whereas when you're empowering employees to make decisions across departments, then they need to be able to be given the tool to make the proper decisions. And so it's important that the accounting and finance department basically sets the percentage rate that they're working on for evaluating the barter components of transactions. So if you need help with that, obviously your broker will be more than happy to consult with you. If you want to bring in people from our corporate team, obviously we're more than willing to work with people as well, work with all the businesses as well, to make sure that everyone is benefiting from barter and maximizing it within their business in the most profitable way they can.